Hi guys, this is Nikki, also known as Faces Trader, and you are watching the Awesome 10X Live. This is August 20, 2020. It's Thursday, and we're going to discuss the global market update. So let's begin. Of course, last night, one of our favorites, Arcimoto, actually reported their very first quarter. Ta-da! So let's read it together, guys. So Arcimoto, ticker FUV, is an awesome 10X pick. And if you aren't aware, you can watch the videos for yourself because I didn't share it to the world. But you could see that I do like Mark. The Mark CEO here is saying that in the next few years, they wanted to see that there is a huge disconnect between cars and how we use cars. Take note of this picture. There are 200 people in 177 cars. But when you multiply it by the people who are seated, usually without cars, this is what it looks like. So the disconnect between cars and how we use cars, when multiplied by everyone, creates massive inefficiency, congestion, and excess emissions, while sacrificing 50% of our urban landscape to asphalt. So their vision is, let's platform, have a change. The electric car vision is 4,000 pounds. Arcimoto's vision is to have 1,000 pounds platform weight, 35 feet squared footprint, battery capacity of 20 kilowatt per hour. So they want you to be mobile without having to spend too much. So they know that the EV future of the Teslas is this one. And they're saying that there is a point wherein Arcimoto is a potential future car for you. So $35,000 versus a $10,000 car. One or two people is going out for Starbucks, one or two people going out for Starbucks for a peak efficiency target, especially if you're just traveling just a short distance, okay? So last mile delivery is also a big industry. FUV, in my view, is a secular trend that has to do with the last mile delivery, especially with the deliverator and their first responders. So the vehicle market, the total addressable market is huge. So there's about 70 million automobiles, 132 million motorcycles produced worldwide annually. That's a year. It's a $2 trillion global market a year, and we are delivering about 65 billion parcels delivered worldwide, about $250 billion of revenue. UBS said that the food delivery market is going to grow from $30 billion to $365 billion industry by 2030. So if you are a gig economy worker, we have proven that FUV is the perfect for you with a hire car help. So if you can't afford a $10,000 FUV, fun utility vehicle by Arcimoto, we think that you can actually pay $30 a day and $20 a day to lease it out. You can rent it out from Hire Car, which is HYRE, which also benefits on this trend. So of course, there's about 50,000 fire stations in the US. The first responders, Harley Davidson sells about 250,000 motorcycles each year. The North American market for ATVs is more than 500,000 units per year. So multiple shots in one goal. Arcimoto's pure electric platform handles all of these big trends, 10 times the efficiency and 1/3 the cost of today's cars. So this is the multiple shots with one goal. Mark Wahlberg of Wahlburger is the very first who signed up, and they're processing from R&D to manufacturing and delivery. So after 11 years, they finally started releasing their production last 2019. And this 2020, this is a future company-owned destination rental outlets plus rental outlet franchises, go-car tours, expanding to vehicle, ride-sharing, vehicle as a service for gig drivers. So this year, as of 2019, they have shipped about 40 vehicles. They are going to plan to ship 100 vehicles, and they are in production of 50,000 vehicles. They completed 100th vehicle, and they have 3 units per day build rate so far. So from a startup, they are going to go very much into the full production mode. So Arcimoto has the fleet, value engineering, scale planning, and a lot of loans. So they are going to focus now with fleets. They have a pilot agreement for the second quarter with a major national grocery company testing Deliverator. For me, Deliverator is cheaper. And it can beat the UPS of the world. It can beat all the electric cars of the world. I've shown a lot of videos. You can actually check it out. Arcimoto is a really good company. Yeah, so the drafts are underway. The goals are there. The vet scaling plan is with Monroe and Associates. It's already engaged. So this is of course a general. This Monroe and Associates can help them achieve that 50,000 vehicle goal. Of course, there's so many happy investors and happy customers of FUV, and ticker symbol of Arcimoto is FUV. You have a chance to buy this. I think after hours, some Wall Street guys are so short term in nature that they are selling it off after closing at 778. I think after hours, it opens at 7.1. So this one is a company that I would love to buy should it fall to $6 or $5. FUV, Arcimoto. So I have bought some prices at 660, sold a bit at $8. But I am willing to buy it at 765. So if I can even buy it at 4, give it to me and I'll hold it for the long run. So it's an awesome 10x pick and you can study it for yourselves. That's a good company. Kingsoft Cloud also having a hard time at 35, always getting sold down at 35, but it was up 6%, extended hours 33. So we did say last night that actually at 31, 31.5, a day ago when it fell down there, that it was actually a good thing to buy from 31 to 25. So quickly bounced back and very fast. So what else are happening? Actually, your electric giants are doing so well. Let's take a look at your electric vehicle group. Electric and solar is a very huge winner group. So yesterday, Plug rose quite big. Okay, HYRE did well. So HYRE. So HYRE is also a partner of Arcimoto. If you don't have money and you are a gig economy, so this is a secular trend on the gig economy. So HYRE is really what the millennials are using. It's not, so you are aware that Hertz has already filed for bankruptcy. Hertz and Avis are having a hard time. These are the new giants, the new disruptors, $1 to $4. So far, we are seeing that these are the companies that are being used and patronized by your millennials. Study it for yourselves. I'm not here to discuss all the winners. Plug, of course, 1382. Plug went up. Let's read it together. The news on Plug. Why did Plug go up? Let me read it for you. There was news on Plug. Let's go to finviz.com. So yesterday, a lot of these fuel cell plays went up. Plug, F-Cell, yan, diba? Lakas eh. Buiset, di ko binili nung 9. There was a buy here at 9. Now it's at 13. So that's 50% up already. So good for the ones who got in. If you got in at 9 below, you are safe. You just trail your winner. And the reason yesterday it jumped was another news. Usually it's just news after news after news. Plug Power jumps again as any and all news excites investors. Why did Plug Power jump? So of course they had a lot of good news even before. So this is just another good news happening for the hydrogen economy. So hydrogen fuel cells is actually very good for the long haul distance world. So with e-commerce doing well, of course, you can do a lot of last mile delivery. So last mile is the short distance. And then, of course, for the longer distance, it's cheaper, more economical to be using Plug Power, F-Cell, Ballard. So those are the winners in the hydrogen fuel economy. So let's read this together. After Plug Power is finally going up again, it has developed a lightweight, rugged 1 kilowatt fuel cell system for use in small-scale robotics, automatic guided vehicles, unmanned aerial vehicles, and other aerospace application. Okay, so that's it. So it ups. So what? Plug explains that its new Progeny system based on technology acquired through the company's June 2019 acquisition of Energy and Just read it together for you. Yeah, but so basically good news all throughout. There's another good news that happened last night. Target, TGT. Target Corp announced their good earnings last night, so up 12%. And we were opining that Costco, Walmart, Target, these are your old economy that is actually an e-commerce giant in itself that doesn't command a premium as your other e-commerce giants. So from about $50, now it's $150 times 3 your money if you found out the Target is not your old economy play, but is actually an e-commerce leader. So just like all e-commerce plays, let's read Target Target's earnings. So, of course, Walmart has Walmart Prime, copying Amazon Prime shipping. Target also has a lot of recurring revenues. Let's read this together. Target's earnings call transcript. Kaboom, kaboom. More than 300% growth on their e-commerce, no? 100%, triple digits. Let's read it together. Okay, so I say this in all humility. The second quarter results were up 24%, the strongest that we have ever reported. So these results are a testament to our team, our passion for our guests. There's actually a CNBC article that is really a good article for Target. Let me read it for you. Kasi it has charts eh. So I like visuals. Target, earnings, CNBC, to the blows away estimates. This one's good. Okay, so monster quarter, profits up 80%, same-store sales sets a record. So climbed 24%, the highest ever all-time high for this retailer. E-commerce was dramatic, more than 700%. Target's curbside pickup service is more than 700% up. CEO Brian Cornell said that the retailer attracted 10 million new digital customers, picked up $5 billion in market share in the first half of the year. Isn't this the best e-commerce company that the world hasn't even been paying attention with? Okay, Target blew past every forecast on Wall Street. Second quarter, okay, $1.7 billion, eye-popping 80% earnings. Sales online and at stores open for at least a year climbed at 24% during the quarter ended August 1, all-time high for the retailer. Shares were up nearly 13%, $154. The market cap is just a whopping $77 billion. So it's cheap. It's cheap. Here's how the company did. So if the company can make theoretically about let's see, if the company can make something like $5 billion a year and its market cap is $77 billion, so are you telling me that I'm just paying 15 times multiple for a company that is growing their e-commerce by 700%? Again, mind-blowing. Okay, here's how the company did. Same-store sales grew 24% versus 7% expectations. Wall Street expected 20 billion. Revenue came in at $3 billion higher, $23 billion. Earnings was magnanimous from 162 to 338. So CEO was saying that they benefited from all that lockdown, forcing competitors to all close. And so the essential retailer was Target, Costco, Walmart, la la la. Of course, shopping traffic picked up. People were hoarding. Even beauty and apparel sales were very strong. Sales were up across all 5 of the Target's merchandise categories and up more than 70%. Home office items, video games, home and beauty. So does this company remind you of what happened with Best Buy? Best Buy also did well. Target same-store sales growth, can you imagine? This company never hit as high as 10% growth, and now it's hitting 24% in 2020. So that's because all the companies went bankrupt, and this is one of the few companies that was open. So the Target sales fulfilled by its online delivery service ship grew more than 350% year over year. So curbside pickup up 700%. They attracted a lot. Of course, they took many market share from your bankrupt companies like JCPenney to Sur La Table. They filed for bankruptcy. Macy's and Sephora was also laying off workers. And so that shopping traffic went to Target. So that's it. They are also they have private label grocery brands. Good and Gather hit $1 billion after launching in September last year. They also joined in-house brands such as children's apparel brand Cat and Jack. So in reaching that mark, that means that when you're in okay, Okay, I will repeat what happened. I was discussing Target. So I was saying that Target was doing so well and that the CEO, Brian Cornell, didn't know if it's going to be sustainable or not. So if they aren't sure if it's going to be sustainable, what I could say is that for the monthly and the weekly, this is a huge earnings jump. And so I think the market is correct for pricing in a 12% upside. Any drops of Target below 150 bucks, I think is gonna be bought. So yesterday, if you bought at 154, I think that you are up. You will have an opportunity to buy any drops near 140. That is all a buy. So from 154 to 130, that is an accumulate for a great e-commerce company that is not being paid a premium. So price to sales is less than 1. Compare that to all your e-commerce entities. Let's say you are comparing to, let's say, how much is a Mercado Libre? How much is a Mercado Libre being paid? You're paying about what? Price to sales of 21. Okay, maybe that's not a good comparison. But you could see that e-commerce giants as a whole, or even the smaller ones like Etsy, an e-commerce platform, being paid 13 times price to sales. So definitely you could say that Target is very much a cheap e-commerce play. Just like how Walmart is not being priced as an e-commerce giant, even if it is. You could see that the price to sales of Walmart, Costco, Target is very much cheap. So there. So I think that there's always room for upside surprises on companies uh, that are disguised as an old economy, but really aren't old economy. So some strong companies that I haven't shared. Let's see, 2020 strong. Progeny. Okay, progeny. Yes, progeny, fertilization. Okay, the girls wanna be, they wanna be pregnant at a later time, and so they have to do in vitro, and all of that is translating to profits and revenues for progeny. Are you guys still there? Are you still listening? Okay. This is a fertility play. PGNY is an IPO last year, and so far I think the market has rotated to a lot of IPOs, and Progeny so far is a healthcare play. So it's a fertility play. As long as more millennials wants to have a lot of children in the future, they might be doing. They want to have children at a later date. So you could be. You could have an IVF. So in vitro fertilization, and Progeny helps a lot of your existing companies. So Progeny's clients go from the tech giants like Facebook, Amazon, and right now actually millennials want not just they don't want beer, they don't want food. What they want is a healthcare plan. So that healthcare plan can come through Progeny. Progeny insurance, of course, helps women and LGBTs. Lesbians also want to have some kids, so they would have that. So they want kids. So that is a play for women getting married later on at a later age, and they still want to have kids. And so Progeny is a cheap insurance that a company can avail for their tech employees who wants to have children at a later date. So that is Progeny, the leader of fertility. You can learn more about PGNY. So far, PGNY after earnings did well, and this is just another move after the earnings front. The current resistance of Progeny is 36. Let's read Progeny's earnings together, shall we? What was the earnings outlook for Progeny? Progeny. So Progeny is a compelling investment case, announcing details for the second quarter, announced second quarter results. So let's read the results. I don't like opinions, I want facts. I do the opinions for you. I am reading it now. Okay, so revenues was $60 million. Return to treatment is faster than expected. The guidance is $320 million, reflecting growth of 40%. So they want a guidance increase of $88 to $95 million. So Progeny is saying that they are the leading benefits management company specializing in fertility and family building benefit solution. Earlier in the year, access to care was disrupted by the pandemic. Our members wanted to resume treatment, but they wanted to do it safely. So patient volumes approached the utilization levels at a later time. So member utilization was approximately 90%, impact of COVID. So, okay, you are seeing that there is growth and the margin is okay, 18%, EBITDA is there. So gross profit Yeah. So, yun, the company is just really sharing that the revenue is still intact and raising their revenue guidance. So from a pharmacy benefit services revenue, 75% increase. Fertility benefits, very few people can increase their fertilities, no? Okay, so there. There. So this is a trend on the Progeny is a secular trend on women or lesbians or gays, the LGBT community, to have kids. So with the technology today, you can have kids. IVF lang yan. Okay? So even if you're 50 years old, as long as you did, if you did egg fertilization when you are 35 years old, then you can do it. So that is my, today, I'll take a look at the commentary. Which is better growth potential, TTD or Roku? At current level, I'd say it's Roku. I'd say Roku has better growth levels. But at 150 Roku, maybe you can enter at 130. The trade is at $450 or $470. I think that's expensive already. Try to wait for TTD. I don't know. I think it has leeway to fall. Honestly, the trade desk, I don't think that it deserves that $470. I could be wrong. But I think Roku is better. Do you think that it's time to trim Roku? Well, to be honest, I think that it is time to trim a lot of expensive names just for cash in case a rainy weather comes. So I could be wrong because some of our stocks continue to go up. Congratulations, Grow Generation is $22. You have to trim if you are not comfortable with a very fast gain. Grow Generation is 80% up, almost 100% up in a week. So you might want to take some profits off, but we don't want to sell all our winners. So maybe like sell half. So if you have Roku, sell half. So let's say your 5% went up to 7% because you're up already, sell a bit. Like 7%, let it go down to about 3 to 4% of your portfolio. There's a question. Thoughts about Target and Walmart. Can we still come into Target? What is the best price to enter if ever? So I think Target and Walmart is actually cheap and people didn't really pay attention to them. So Target and Walmart is one of those e-commerce giants that you have to be willing to pay. Today, if it's $150 for Target, it's okay to buy as long as you are willing to just allocate 3 to 5% so that if the market fell and brings along Target and Walmart with it, you can be safe to get another 5 to 10%. The truth is, nobody can anticipate corrections or predict corrections immaculately. And I am not an immaculate person to perfectly time. So I'd say that just always prepare any day. The market can fall 10 to 20% or 30%, but you shouldn't be worried about it because you have a 100% to 200% future with companies like Target, Walmart, Roku, and so forth. So what is the best time to accumulate airlines? United Airlines, Delta Airlines, AEL, LUV. I think that these names are just trade. So in terms of accumulation, they are not my best sector pick. Airlines, you can make some money, but I think that it's a buy and sell, not a buy and hold. So it's really about the trade. So Delta Airlines, you know that at 25, 26, you can buy it, but at 30, 29, 30, 33, you sell it. So if you like to day trade or swing trade or monthly trade, yeah, those are like trades for me. Those aren't like long-term loves for me. Hi, is Kroger, Conagra Foods still undervalued? No, they aren't undervalued for me. Kroger, I liked it. I liked it at 21. Kroger is now 36. I don't want to buy at 36. Conagra, I liked it at 27. Conagra is now 36 ba? I don't think it's undervalued. So my answer is it's not undervalued. Which sectors do you think the market is rotating to? Solar. The market is rotating to solar, electric, fuel cells, but it's expensive. Some of it is quite expensive. So I think what you want to do is, it's okay to be expensive for a reason. So like you saw that Target did well. So those are companies that did well. Video games is expensive for a reason. So Nintendo is not going down. Did you notice that ever since earnings of Nintendo, it just keeps going all-time high? So I think that the market is willing to buy some Also, you could see naman, obviously, IPOs are doing well. A lot of IPOs and SPACs have been the destination of where the money went to. A lot of undervalued small caps is also where the market rotated. So the market rotated to the grow generation, to the gardening names. I'm not gonna name a lot of gardening. It's in my awesome 10x picks, but I think that the market is really going to a lot of agriculture tech. So I think like if you are doing a lot of agriculture, and then for e-commerce, I'd say that the market is so much in love with C Limited that any dips of C Limited they would buy. So C Limited right now is $150. I think that C Limited, if it goes so I think like e-commerce wise, C Limited proved that they deserve the premium. Walmart and Target also said, and Best Buy also deserves their premium. Actually, this one deserved the premium. The rest is just not being priced correctly. So yun, you can see what happened. Let's show to you Best Buy. What happened to Best Buy? BBY? Sorry, not that. BBY. Best Buy. So Best Buy, after earnings, it just went straight up. So after 91, gap up, went to 111. So I think that's what's going to happen with Target. So after the gap up, it's just going to go higher and higher and higher. So like, I don't mind if you buy at 154. If you buy 140, good. So that, it can just go up and up and up. I think that these ones will just go 180, 190, 200 someday. And the fact that last mile delivery has done well shows to you that eventually I do think that first, that Arcimoto, any drops would be a buy. So that is my opinion. And I think that there will be more companies that will deliver great results. And I think that as you can see, these IPOs like PGNY can be a buy on dips. So let's say you didn't buy it because now it's 32. If the market drops at 30, 28, 27, you can probably buy Progeny. You might get an entry there. So there will be a lot of names that we can feature. Some names I don't even feature, like At Home Group, 18.8, 11% up. So this was, I think, a home furnishing. So in the US, a lot of people staying at home. This is also a huge secular trend. This has been winning. Furnitures went from about $2 to $20. That is a 10x move for At Home Group. Specialty retail, I didn't catch these moves. So congratulations to all the people who actually obviously understood that home furnishings was a great trend to be in for the COVID pandemic. So there are going to be pandemic paradoxes. If people are staying at home a lot, they want to have furniture, they have to handle home furnishings, they're doing a lot of gardening. You have to understand what people are doing at home, and that is going to lead you to profits, profits, profits. That's it. Thank you very much, and hope to see you again tomorrow. Tomorrow is our Friday free class pick. Do join us 5:30 to 6:30 p.m. Thank you for everyone listening, and hope that you had your grow generation. Thank you. Bye-bye.